Hey guys, so it's Christmas today. Hope you have nice holidays, and you also do have tomorrow a bank holiday. So I was not really sure how today will basically deliver. Still, we had actually a really clean delivery day. So as you can see right here, that's the daily chart as always. What I was basically looking at was the wick of our up close candle right here. Why? Because we are in trending conditions to the upside. We are definitely targeting basically higher prices, especially because on ES we are trading at all-time highs. And also like an important level to me today was the upper quadrant of the daily wick right here, which I labeled daily wick 0.25 level, and definitely also the huge higher time frame gap right here, which I was aiming for today. So that's basically what I was looking at the daily chart today. That basically these are my important levels. So let's drop to ES. As I already mentioned, S&P or ES is way more bullish. So we are definitely trading at all-time highs right now. We scrapped triple daily buy side liquidity today, and we have a really strong trending bullish day today. So therefore, I was also expecting bullishness on NQ following basically ES higher. So let's drop to regular trading hours, because that's actually quite interesting how we are trading there, because basically the last trading days I was always looking at the range of the new opening range gap right here from Thursday. I know it's been a really long time since we traded there, but still, to me, it's definitely an important level, because the last days we were, so for Monday and Tuesday, we were only trading within the range and we could not trade above it, but also failed to trade below the lower quadrant. So therefore, we had actually been only trading within the range, and I was looking either for a basically break of structure to the downside. So in order to basically fill in the liquidity void right here, and also to trade back to the new opening range gap right here, or we would basically trade above it and reach for the equal daily buy side liquidity right here, which is definitely more likely, especially because ES is really bullish. So therefore expected that NQ would follow to the upside. So therefore what I was looking for today was that we basically, because we closed above the range right here, that we would trade back to it, found basically, or find support within our high of the new opening range gap, and from there on basically have a continuation to the upside to the equal buy side liquidity. So therefore you can say that our regular trading hours chart is definitely within a market maker buy model, which is targeting higher prices as a objective. Therefore, we don't expect that we will trade back into the range. We expect that we will find support basically in here, and from there on trade higher. Today's trading new opening range gap, as you can see right here, is smaller than 40 handles. So therefore, we basically ignored. But it's definitely still nice to see that we open up basically lower, kind of like a manipulation lower. From there on, we traded lower into the high of the new opening range gap, found support, and then traded higher. So that's basically really nice to see. So let's drop now to a 50-minute chart on NQ. So basically what you can see right here is that we scrapped Asia highs and low, and also our midnight opening price was barely traded too. So that's also really interesting, a really bullish day today. If we cannot reach even to the midnight opening price or below it, and also the fact that we left basically London lows intact. So we only swapped New York open kills on sell side liquidity, and that was enough for our market maker buy model. And from there on, we traded to the upside and aimed for the higher time frame gap right here, and also for the daily wick. So I think with that we can drop to a 1 minute chart. So actually right here with the opening of our AM session at 9:30, we had actually quite a difficult delivery. So we were still within a short-term market maker sell model because we swept Asia highs. From there on, we traded lower. And yeah, as you know, I don't trade before at least 9:45, and that's just the perfect example where I do not, because you can really get caught up in here trying to chase any any short-term objectives basically within the opening. So therefore, I really was patient. We scrapped New York open kill zone, sell liquidity, and then from there on just ranged a bit, and then being able after or basically with the 10 AM macro, we traded higher. So ES was at that point actually way more bullish. So we did not really had like, so we had SMT right here with the New York open kill zone, sell liquidity as well. And we did not range, we only traded higher on ES. So therefore I was expecting NQ to follow basically ES, because ES is the leading index in that case. And also because we are near all-time highs on ES, I was really expecting a bullish day on ES, which means NQ would also like basically not be as dramatic trending to the upside as ES. So ES was really bullish today, but also like really has its objective higher, especially also like with regarding the regular trading hours chart. So therefore was kind of waiting for the 10 AM macro, how we would deliver. Actually, I'm a bit surprised that we did not reach for the London lows. Still, that's also like a sign that we are really bullish. And let's basically now talk about my executions. So I entered long right here after we were able to trade basically above the breaker. So I only marked out the wick because that's for me the most sensitive price point, and also because we reacted to it right here as resistance, and then we closed above it right here with the candle above consequent encroachment, and then I entered long right here, and also added right here after we traded back to consequent encroachment and reacted off it. Actually, because tomorrow is a bank holiday, obviously today was really low volume actually, because I was trading right here with 3 contracts, and still with taking one off right here at our external session by sell liquidity, I only made like 20 bucks. So yeah, only more a I don't know, getting reps in, but not really a high risk day for me. So I was definitely trying to have a low risk day today, especially because I was already profitable on the week, and I just with also getting nearer to New Year, I wanted to be basically low risk in the market, and that's what we definitely got today. Still, this day was a really clean delivery day. I would not have expected such a clean delivery, but I was a bit surprised by the deep retracement we had right here. But that's just basically the algorithm on basically smart money making sure that most of the traders are not within the move, which basically will follow. So that's really deep manipulation. Basically appeared right before 10:30, and then with 10:30 we had our perfect smart money reversal. Why? Because we had SMT right here at the lows. We reacted off the breaker once again, so therefore that just shows again how important the IPDA right here is. And from there we broke above the inversion fair gap right here. With that we had CSD, so a change in the state of delivery. I entered basically with I think 2 contracts right here, and put my stop a bit too tight. And that's the really important lesson I learned today. So what I did was I wanted to be basically break even today at least. So I put my stop a bit too tight, and as you can see right here, I got stopped at the perfect low of the candle. But yeah, it seems frustrating, but it's just my mistake, and that's what I love about trading. It's always your own mistake. So the market does not know where your stop loss is. It's just it's just basically the wrong approach for me. It definitely has to be below the breaker, especially because we are still not in low resistance conditions. It definitely needs to be below the lower quadrant, or even completely below the order block. I think I said breaker, I mean the order block right here, the bullish order block, so the down close candle, it does need to be below the order block, and also because we have a small inversion, a small volume imbalance right here. That's also, yeah, something to notice. We traded back to it, basically reacted off the lower quadrant and traded higher. So yeah, that was my second attempt, and from there on I did not trade it anymore, because I definitely did not want to get caught up in revenge trading basically and over trading. I'm content with that. Still, this would have been a really nice trade to caught, or to basically be part of, because yeah, it's just amazing to see that I was right about my higher time frame analysis, with basically being aligned with regular trading hours, also with ES, because ES was already trading at all-time highs, and we reached also like to the huge higher time frame gap right here, which is the huge volume imbalance on the daily chart. So that's really nice to see, and also the fact that we had a perfect short-term run on stops right here. So we, as you can see right here, the low of the candle is at 25,634.35.4. Okay, guys. So and right here, it's basically the same number but 0.5. So only by just by that we basically traded below the low right here, and that's what we want to see within our long and close macro, that we have a short-term run on stops, and from there on we displaced higher and only barely traded into the fair gap right here. We did not even trade it below the wick, but into the really small volume imbalance between the candles right here, and that's your IOFED, so basically your institutional order flow entry trade, and that's basically your sign that smart money is in play right here, and also the fact how we perfectly reacted of the consequent encroachment level right here with the candle, and from there we just took off, basically traded higher, and that's basically a perfect algorithmic delivery today. So right here, high resistance delivery to the upside, from there on manipulation lower, and then smart money is in play, and we have a low resistance delivery to the upside, reaching for our objective, which was basically all the way in play, so already way earlier. So yeah, that's basically it. And yeah, I really like actually the day, even if it's for me only a break-even day and it was only really small risk, as you can see right here. But just to see something like that play out, to know that I was actually aligned with my analysis, it's so much fun to see it play out like that. So to find examples basically for the algorithm, yeah, just for a algorithmic price delivery, it's just amazing. And yeah, I think that's also like my last trading day of the year, because obviously tomorrow is a bank holiday, and then also like next week it's really difficult. Yeah, we basically, I think you could eventually look for trades next week. So I don't want to trade on Friday, because we come basically back from a bank holiday and have a no news Friday. Still, maybe I take a look on it. I don't know. It's just, you really have to, it definitely depends on how we deliver. So that's always the case. But it's always also like important to understand where we have like more probabilities within the market, so to make money. And with the end of the year, it's always a bit more difficult, because we have bank holidays, we have just lower volume, and therefore sometimes it's just that the market tries to relax, also like sometimes to even yeah, how you say it, to basically create liquidity, which will basically get run within our first week of the new year. So because there we have lots of high impact news, non-farm payroll, NFP basically, non-farm employment change, and also like employment rate. Yeah, so really lots of high impact news. I will definitely try to avoid the first week of the year. So that's really important. It would basically be unresponsible to trade in here, because like, so like Tuesday and Tuesday would be not the best, would definitely, or I really need to avoid Tuesday because we have no news and we will just basically consolidate in here. I expect that we will deliver like that. But it's just, yeah, I think that's the difficult, the most difficult week of the year is basically the first week in the new year. So, and therefore, because we have basically, yeah, a high impact news week basically ahead, I don't really expect that we have really nice clean delivery runs within our next week. So therefore, I don't really know how much I will trade, but I think with that, I basically have my last trading day of the year today, and I'm content with that actually. So I'm really excited for 2026. So it will definitely be a great day, great day, great week, great year. Hopefully also like have lots of great days and weeks. Yeah, sorry guys. But yeah, I'm really excited for the year. I would also like to try to trade a yeah, prop firm. I don't really know when I will buy it, but I think I will start trading on it after the or basically with the second week of the new year. There will basically start trading a yeah, prop firm. So trying to basically finish the challenge and then yeah, trade on a funded account. So I'm really excited for that, definitely, because I will also like show you my Notion because it's the end of the year. Also like really amazing to see. So that's basically my weeks I analyzed, and yeah, so this is like this week we had 2 winning trades. Really nice to see. Maybe let's also drop to a monthly chart. And as you can see right here, December, which is actually the most difficult price action in the year, was my most profitable month. And that's due to the reason that I really learned a lot in definitely the last, I would say, 4-5 months. I learned so much. So really excited for New Year's, definitely. And yeah, I think that's basically it. I hope you enjoyed it. I hope you learned something new. We, as always, had a lesson from today that we will trail our, or that we place our stop loss based on price action, not on your P&L, so not on basically your money. Because in that case, even if you would like put it below, actually we do need to put it even below the swing low of the SMT. That's the most like safest way to trade your stop. Because even if I get stopped right here, that's definitely the invalidation point for the setup. And right here I would even, I think, only risk like 40 or 30 bucks in that case. So I would be down like 20 bucks for the day. And that just with that, I think that's a perfect risk to reward ratio in that case. So yeah, definitely still a lesson we have to learn. And yeah, I'm really excited for the 2026 year. I was only learning 2025, only learning 2024. And yeah, we will definitely get it.